Hi everyone, hope you're all doing well. Hope you had a great weekend. Today we're going to start off with a brand new stock that I bought. And I started buying this stock after a pretty big mistake last week, and I was completely wrong on what I said, and I've done a U-turn and I've actually bought this brand new UK stock, and I'll show you the error that I made and then obviously talk about the new UK stock that I have been buying. Just a quick shout out, I said to you guys, if you do get me to 19,000 subscribers, I will do a live Q&A session on the Sunday coming up for you guys, and I thought there's a good chance we can make it. Well, over the weekend there was a surge of new subscribers, probably like the best subscriber day that we've had for a while, and we are now only 49 subscribers away from hitting the 19,000 subscribers, which would be absolutely amazing. So yeah, if you do get me to the 19,000 subscriber mark by Sunday, guys, I'll do a live Q&A session for you on the main YouTube channel to celebrate the 19,000 subscribers, and then we're on to the big one. It's when that far left number changes, and we go for the 20,000, which will be absolutely amazing. And thank you for the support. The videos have been doing amazing at the moment. I think like it was last year I was a bit like, oh, I don't know where the YouTube channel's going at the moment because the views have been absolutely shocking, but like at the moment it's absolutely flying. So thank you for you guys that spend your time to listen to me mumble on about some stocks, so thank you so much. Just a quick shout out if you're on the Patreon, guys. I did just in the last 24 hours drop my US portfolio review for July 2025, which is going really well. So if you do want to see the exclusive videos, guys, join the Patreon. We had quite a few new Patreon members over the weekend as well, which was great. So thank you for you guys that do support the YouTube channel. If you do go on the Patreon and you join monthly, it's £6 a month. If you do sign up yearly and click the yearly button, pay annually, you save 15%, so it works out as £5.10. And obviously the price of a coffee, and to say thank you, I give you guys some exclusive videos, and the US portfolio is one of them, so you get to see how the US portfolio is doing. So anyway, let's get on to this video and get on to what you clicked on the video for today. So last week I made a video talking about Greg stock, and I said Greg stock crashed, is it time to buy? And in that video I said, there's a few concerns here at the moment. That's why the stock is down. When you do look at Greg stock, it has been a tough time in the last year, down 40%. It's very rare to see Greg's down that much. Is it a time to go buy Greg stock? And on that video there I go, there's some problems here, but when you look at the value, it's not too far away from being a buy. I would ideally like the stock to be a little bit lower, 15% lower, around about 1.7 billion market cap is what I said. Now, Luke on the Discord went, but Jacob, you're using a 2 billion market cap on your video here, but it's actually 1.7 billion. I went, oh, you what? And I looked and I went, oh, the data I'm pulling off on Simple Wall Street says it's a 2 billion market cap. So the information I showed you guys, and I was running my numbers, for some reason it wasn't correct. Like Simple Wall Street did not update with the correct market cap, which was absolutely nice. So when I was saying to you guys, oh, I want it to be 1.7 billion market cap, it turned out it was already a 1.7 billion market cap. The problem is I had data I pulled in from Simple Wall Street said it was a 2 billion market cap, and it hadn't updated the drop that it had, this drop here. So it was actually at 1.7 billion market cap where I said I would start buying it. So obviously, with it being there, I went and bought Greg's. It was at 1.7. It is a 1.7 billion market cap, and I said this is why you have method and what you'd actually buy it at. And with it being that 1.7 billion market cap, I went and bought it. So 4%, 6%, 9% revenue growth in, 6, 7, 8% profit margin, 15 times earnings, and include the 20% dividend yield as well, because obviously you do get that 20% dividend yield with Greg's, and I would expect that to go up as well, going forward. And looking, if you had the 20% on, you get towards the 90% on the mid side, and on the high side you're getting that 100% return. And you guys know me, I buy stocks for 2 to 5 years. I aim for 100% return, and that's certainly in the range where I would be, where I'd buy Greg's, and that's what I did. And that also prices in some things going wrong for Greg. So when I was talking about this video here, when I was talking about Greg's last time here, when I looked at it, I actually saw like the amount of negativity towards Greg's. And I was like, wow, there is a lot of fear out there when you're looking at that at the moment. And that's a great indicator for me. That's one of my favourite things about doing YouTube, is that I'm able to pick up like the sentiment of stocks from when I talk about them on YouTube. And with everyone talking so negative on Greg's, I was like, yeah, you can tell that share price is like sunk down at the moment because everyone's negative on it. There's a few people saying they're buying, but I'd say like 70 or 80% was like negative on Greg's. And I was like, yeah, the sentiment's really low here. You can see why the share price is low. A lot of people following the share price and not, looking at the company. And, there is concerns out there. 100%. Like, you see so much negativity out there about Greggs at the moment. Depend whatever news story you want to go with, whether you talk about the thieves stealing the food at Greggs at the moment, it's an issue. Whether you talk about maybe people a bit more conscious about healthy eating, maybe it's the competition, maybe the consumer is getting squeezed, maybe they're just so saturated now. There's just Greggs on nearly every corner. How many stores can they keep on opening? And there's that element of, okay, maybe the best days of Greggs are behind them. But that doesn't mean it's a dead stock. That doesn't mean you can, because a company has its best days behind them, doesn't mean it's a complete, stock that, you want to be completely avoiding. If it's still growing at good rates and you're paying a good valuation for it, you can still make money from it. Look at Apple, for example. Apple have had, haven't reinvented the iPhone for the last, 15 years, and they're still being a very successful company because they're able to just get that little bit, milk that bit more out of it at the moment. And as long as they do that, you can make good money on a stock, even if it is its best days behind them. As long as it's still growing at good rates and you pay a good valuation for it, you do well. And that's the thing, is that everyone agrees you want to buy a great company at cheap prices. But when it actually comes to it, when you actually get those great companies at cheap prices, that's when people go, well, maybe not this one because this now has this issue on it. You got to look and go, but is it going to affect it on the long term? Can this still drag out, good growth here and a good share price at the moment? And when I'm showing you like the numbers that I'm factoring in on Greggs, like when I did this video the other day, like I said, I was quite negative on the stock for some reasons that we mentioned. Like, I am concerned, but if you factor them in and you still see an upside, then why are you not going to buy? And when I showed you like the numbers that I was running, and if I was potentially going to be, go and buy Greggs, I put 4, 6, 9% revenue growth in. This is historically way lower. I don't know if I've got any revenue growth of what Greggs are doing at the moment. But Greggs has been growing at like 10+% a year. So I've factored in the slower amount of growth, and I think they can still grow at these levels because at the end of the day, they only need to improve the like-for-like sales every 2 or 3% every year and put their prices up a little bit. They obviously can grow by opening up new stores, even though they seem pretty saturated. There's still some stores that they're going to be able to open up, and that's still going to give them good amounts of growth, even if it's not to the levels that they used to do. And that's factored in, here. Profit margins don't expand from efficiencies, which if you're doing the scale that Greggs are doing, you would expect some efficiency. And even if you look at Greggs and go, oh, well, it used to be a 20 times earnings business, and it's not going to do that now because it hasn't got as much growth. Well, as long as you factor it in, and you look at these numbers here, I factored in the 15 times earnings in. So with the slower growth, no expansion of profit margins, a lower value than it's ever been at, if you're getting upside, why are you not buying it? So that's why I say, like, when I last made the video on it, I was like, it sounded quite negative on it, but I said, but at the end of the day, as long as you price these things in and you see upside, why are you not going to buy? And that's why I said 1.7 billion market cap is my target. And then we got there. And then if you do think, oh, you know what, they go back up, they get the growth back up to 9%, or you know what, the market goes, oh, we're going to trade you back at 20 times earnings. If, even brilliant if they go back to what they used to do. But even if they don't, even if they grow, you're pricing these concerns, if you still make money on it, why would you not want to buy? So yeah, I ultimately what I'm saying is that I did buy the start position in Greggs at like a 1.7 billion market cap, and yeah, I built the starter position. I still think like going forward, they're still going to grow going forward. With the like still growing, little price hikes, opening up those new stores. Yeah, maybe Greggs best days are behind it, but I factored it all in, and hopefully this warm weather situation, maybe there's some truth in that, and in a colder weather time they perform better. So yeah, I built a starter position, and then ultimately at the end of the day now, what happens is if Greggs, if the market throws its toys out with its pram again, and let's say all of a sudden it drops the stock another 10% from here, well then I'll go buy again, and what I see is the upside up even more. Or what happens is if I buy my start position and it rallies from here and it goes up 30-40% in the short term, then I'll sell and move on. So yeah, that's how I've positioned myself, is that I bought the start position, and if it goes up from here in the short term, 35%, I'll just take my profit and run away from it. And if Greg's kind of maintains here for a year and the financials still hold up, or even better, if the stock dips in the short term and I can get the stock even cheaper and that increases my upside, then I go in and buy some more shares. So yeah, that's the video overall. Today, talking about, I bought a new position, new UK holding, which was Greg's. Even though the other day I said I wasn't going to buy, I got the market cap totally wrong, which is a shout out to Luke, and why sometimes it's always double worth checking your information, going to a couple of sources and making sure you're getting the right data for market caps, P ratios as well. So thank you to Luke who pointed it out, and then I realised actually, you know what, I should be buying at these levels. And overall, like I said, there's negatives here, but if there wasn't negatives, you wouldn't be able to buy the stock at a 40% dip. And you've just got to weigh up, okay, with the negatives, could this company still do well? And you restrict the growth a little bit more, and that's what I've done. Restrict the valuation, that's what I've done. And I'm still seeing decent upside with those kind of more risks, or let's say Greg's is kind of at the peak and coming down the slope a little bit at the moment. So let's say Greg stays, best data behind them, can I still make money from here? Absolutely. And like I said, the ultimate thing that everyone always looks at is like, when you look, everyone agrees you want to buy great companies at great prices. It's just that so often when it happens, people don't do it because they look at the issues and go, but there's this issue here. Well, if you don't have the issues, then you never get the stock. You don't get a company at great valuations when everything's going absolutely amazing. It just doesn't happen. You're buying things at 52-week highs if that's happening. And when I do look at Greg's, and is Greg's a great company? No doubt about it. You don't end up returning 2,853% return on the stock price by being a crap company or an average company. That's a great company. And like I said, I don't see Greg's getting to the point of view where they've been one of the best financial companies on the UK markets for the last 10, 20, 30 years and they fall off a cliff overnight. I don't see, where Greg's go from this amazing story to, the stores closing down, negative growth, profit dipping. I can't see that happening in a 12-month period. Now, sometimes it does happen, so maybe I should say never. Sometimes it might happen, but for Greg's, I just can't see that happening. I still think like they will continue to grow. Granted, slower rates. Store openings, granted, will be at slower rates, but like I said, when I show you numbers, that's kind of all factored in there. So yeah, I'll kind of call it there, guys. So I hope you enjoyed it. I'm buying. I have bought a start position in Greg's, and we'll see where it goes from here. So thanks for watching, guys. See you in a bit.